Good afternoon, everyone. Ben Harmon here once again, and we're covering this week's small business banking services. We have our business services manager, Ken Fouts, who's going to give us the professional insight on some of the things you should do when trying to start and expand your small business. Without further ado, Ken Fouts.
Good morning, everybody. I'm happy to be here. Happy to talk to everybody. Just quick highlights on some of the practices that businesses do when they're starting out or looking to expand. So I'll start out with a quote by Aliko Dangote. If you don't know who Aliko is, he is a businessman in West Africa who started out somewhat small but expanded rapidly. And the way he looks at things is to build a successful business, you must start small and dream big. And certainly, knowing Aliko, he has dreamed big and has proven himself to be very successful. So the hot topic is, why do small businesses need banking services? Well, in a nutshell, it's very difficult to function without banking services, but more importantly, what services do you need? And what tools will make you be successful with your business? So small businesses require all kinds of financial support to open, grow, thrive, loans to get your business started, to building out your payroll system for employees, specifically direct deposit. Banking services are necessary for many successful businesses, and we provide a lot of different tools that help augment that success. The key is we don't want your banking relationship to take over the bulk of your day. You have other things that you want to focus on, but we want them to be simple enough and efficient enough so that you can take on your daily task and just have your banking services as a component of that you can get to quickly and efficiently manage. So some of those tools are managing your working capital. So how do I do that? What do I have? Where is it? What do I need? And what do I have to pay? So that's what we look at working capital as. Another component is to look at it as your cash flow. Your source of funds to start and grow your business. I have this business plan. I need to have X amount of money to be able to kick this project off. How do I do that? How do I communicate that to a bank so I can get that initial investment into my business? You know, there are tools out there that you can use, such as putting together a business plan, and that helps us tell a story behind what you want to do. Managing your accounts receivable, what's coming in, who owes me money, or maybe you have a point of sale system or a retail operation where you want to be able to see, did that proceeds from my credit card receipts that I processed yesterday, has that posted to my account yet? So how do you see that? Where is it coming from? And then managing your payables and payroll. How do I do this efficiently? If I'm starting out, am I going to write everybody a check? Or are there other mechanisms that I can use so that I can pay more efficiently? Perhaps I want to pay my vendors with a credit card, or I want to provide direct deposit of pay to my employees, or using the same tool that I use for direct deposit of pay, which is the automated clearinghouse, can I pay my vendors with the electronic interface of the automated clearinghouse? Do I pay vendors with wire transfers? So how do I do all these things efficiently? And can I do that from my desktop? These are all various things that we want to look at as far as managing working capital and cash flow. A key component is building a good relationship. When you look at various business services, you need to have a good accountant, you need to have a good attorney, You need to have a good banker. And all those three entities will need to have a fairly intimate knowledge of your business. They need to have an understanding of your industry, your specific needs, and how can we make you successful. Need to be able to run what ifs by your banker. You need to be able to say, hey, I'm struggling with this. How can you help me? You got to have sometimes those difficult conversations. From our perspective, we look at you as a partner. We're investing in your business. We want you to be successful. So, and I say that in many cases, we're investing up to 80% of the startup capital for your business. So that's why we talk about it being a partnership, and it has to be an open partnership. Like I said, we want you to succeed. We can provide useful guidance because you're not the first person that we've worked with in a banking relationship. We've worked with a lot of different people, and we have a lot of different expertise across different industries. I can say myself, I've been in the banking industry for over 30 years. And while I have expertise in a number of different industries, I've touched a number of different clients from different backgrounds time and time again. So I have a good sense of what's successful. And I have partners that are on my team that, have similar types of experience as well. Oftentimes, you're going to deal with a number of different people in the organization. We like to look at ourselves on our business team as relationship managers. So if you need help in another area of the bank or the credit union and you're not having success getting something done, again, we're the advocate. Oftentimes, if you start with us first, we'll make sure that your needs are streamlined so that we can accommodate you quickly. And I mentioned those other centers of influence, the attorneys or accountants. We have a good network of those people. And if you don't have one, oftentimes we can make recommendations on a few different ones that you can meet with, and you can determine who's going to be the best fit for me. So those business contacts are certainly helpful as well. The other component is trying to optimize the lowest cost of funds for you based on the risk that we see. So those are things that we look at when it comes to a lending relationship. How can we get you the best price on your loan or interest rate on your loan? Or if you're a net investor, how can we maximize the return in a highly secure way on your idle cash? So those are things that we look at on a regular basis for business clients as well. So common small business accounts, there's a number of accounts out there, but the common ones that our clients use, we start a relationship. You start it by opening a checking or savings account to help you manage your cash on hand. And like I said, that refers to your immediately available or idle cash, so that what can you do with this? How can you manage this the most efficiently? We have a number of different accounts that we use with businesses, and it depends on what your needs are. We'll try to place you in that account that's going to suit your needs now, but also we'll try to anticipate how you're going to grow in the next few months. So that's how we look at things. And we do a fairly thorough analysis of initially in our initial conversation to try to place you in the right account up front. So we use small business checking accounts, commercial checking accounts. Again, they're all driven by what your volumes are going to be based on velocity of transactions, as well as the size of your deposits. Savings accounts, we have business savings, We have money market savings accounts for those that are going to have higher dollar deposits. And we also work with certificates of deposits. We have clients that will ladder certificates of deposits out depending on what their future obligations may be. For example, they may start saving money, establishing a sinking fund for a building they might want to construct down the road. You know, CDs are a good tool to get a little bit better rate of return, and we can tie those to specific targeted dates of maturities to help you meet your needs for, let's say, I want to make sure I put 20% down on this building and I'll finance the remaining portion of it. CDs are a good tool to build up to do that. Typical credit services will support growth. Credit services are what we refer to as loans. Many companies depend on credit from their financial institutions to open, support, and grow their business. The type of credit your business needs depends on factors of how quickly you need the funds, how much you will need, and how long you will need or how much time you need to pay the loan back. So there's a number of different variables in the commercial lending world. And we really try to fit your credit needs and the types of loans we put in place based on what your objectives are. So lines of credit can be used in a number of different ways. Some people will have an equipment line. Some people will have an equipment line will be used to purchase equipment. Or you can have a accounts receivable line of credit. Let's say you have a situation where your receivables aging is 45 days out. So, but you have payables obligations that are on a 30-day cycle. So you have a accounts receivable line that you provide some financing until you get paid by your clients. So that's something that can help with that. A purchase money line, let's say you have a line out there to purchase inventory. That's often the case in many retail operations. The equipment line, obviously, if you're buying trucks, you know, I talked to a client a few weeks ago that is buying a fleet of trucks, and he was financing each truck individually. Oftentimes you can have an equipment line in place so that you can purchase your fleet and then do the end financing later. So that's how lines of credit can be used. Working capital line is the last one, and working capital can just be in place to help support your cash flow needs throughout your monthly cycle. Equipment loans, I mentioned the purchase money line. Well, you can do the equipment loan at the end, or if you're just doing one-off, let's say you need to buy an end loader and you have to spend $100,000 on it. The equipment line comes in helpful for something like that, or the equipment loan. Instead of a purchase money line, we just do a specific equipment loan for that piece of equipment. Commercial mortgages, I mentioned the building earlier, and the commercial mortgage is something that we can put in place to help you purchase that new building or purchase that piece of property, however you want to structure it, or purchasing an existing building that's commercial real estate. Any types of things like that we would use a commercial mortgage for. I mentioned credit cards for purchasing needs. We do business credit cards. We underwrite these using your business. If you're a startup, we'll use your personal credit as the tool to do that. But credit cards are oftentimes used in place of writing checks. And the reason you do that is because you create your own cash flow because you're using our money during the month. And then when your credit card payment is due, you pay your credit card off and you start all over again at the end of the next month. Our credit cards, we have, we call it 3-2-1 rewards attached to them. So depending on the merchant that you're going to, where you're using the card, we'll pay you 3%, 2%, or 1%. So it's kind of a nice kickback that you get for using our card program. Those are the typical types of credit. There's other obligations that we can do as well that, depending on what your needs are, can be a little bit more extravagant. Cash management services, these are the tools that you use. You know, how do I manage my cash flow most efficiently? And there are a number of tools out there that you can do that with. Basically, what we're trying to do is through cash management, we're trying to get you to either reduce your interest expense throughout the month or maximize the amount of interest income that you're going to earn. I'll say it up front right now, in this current rate environment that we're facing, you're not going to get a lot of gains by trying to be a net investor, just because the rate of return is pretty low. But you know, that in the future, I anticipate that will change, and it will become more important, because along with deposit rates going up, your loan rates will go up correspondingly. So perhaps the key tool for cash management is information reporting. It gives you a snapshot into what you have, how much you have, shows a picture of your loans as well as your deposit accounts, and it gives you a picture of what's coming in, and you should have an idea of what's going out. So it gives you an idea of where you are from a cash position standpoint. Our tool starts with our business online banking, and this is something that we provide the core package of this is free to any one of our members. Electronic funds transfers. These are electronic payments that are typically ACH that are either coming in to your account. So if you have somebody that's paying you electronically, you're going to see that as an ACH credit, which is also known as an EFT. Or if you are paying someone electronically and that transaction will go out, you can do that with an enhanced service like ACH. Or if you use a debit card to make payments, you'll be able to see that debit card transaction show up right away, and it shows up as an EFT. Other EFTs would include wire transfers, and we have the ability to set wire transfers up through our online banking. Again, that's another enhanced service. And when I say enhanced service, there are additional fees for that for ACH transactions as well. Remote deposit capture. The Federal Reserve made things more efficient at the beginning of the 21st century, and they made all check transactions eligible to be converted into electronic checks. And they did that so that they can exchange checks electronically. But in doing so, we now can allow our clients to be able to scan checks at their desktop or take a mobile picture of a check and deposit those checks electronically. It becomes a much, much more efficient process for you folks, because you don't have to run to the bank or the credit union on a regular basis to deposit money. You can do it electronically from your desktop. Anecdotally, don't try to scan cash into your account, because it doesn't work. And I have had clients try to do that in the past. So nonetheless, it's efficient for you. It also helps clear those checks just a little bit faster, but not so much that you're going to notice it on a daily basis. Merchant processing services. If you want to be able to accept credit card or debit card payments, we have a merchant partner that we can do that with. And what happens is they set it up. You can do this electronically, either with a merchant machine, or you can get a fob that installs into your smartphone, and you can process transactions that way. Those transactions are credited to your account via an ACH transaction. So I mentioned that earlier with EFTs, that's how that. We also offer services that will help support your employees. We do a number of different things. We like to say it's a value-added service, or in some cases, there are free benefits that you can provide to your employees. It's just a helpful tool, and it makes your employees feel good about working for your organization. We have, oftentimes we recommend separate payroll accounts specific to employees, depending on how you're running your payroll. We can set up retirement accounts or retirement programs for your account, for your employees, 401k services, that type of thing. Health savings account, that's a common thing. If you have a high deductible insurance program, oftentimes you can set up a health savings account where your employees can have tax-free savings go into this account, and it's used specifically to meet their deductible obligations associated with their health insurance plans, as well as dental plans and eyeglasses as well. And then 529 savings accounts, we can set those up if you have employees that want to set up savings plan for their kids' education. The 529 plan is a pretty good tool for that as well. One thing I didn't mention on the previous slide, let me bring that back up, related to separate payroll accounts. I mentioned direct deposit to pay. That's an ACH function, automated clearinghouse. And that's where you can electronically deposit into each individual accounts of your employees. It's a streamlined process. So what happens on payday, that money can be deposited into their bank account, wherever they bank, and it will save them a trip to the bank. Oftentimes, a lot of people on payday, people are trying to leave at lunchtime, coming back late from their lunch break. If you have direct deposit to pay, it streamlines that process, and they don't have to worry about it. And they can actually check on their smartphone into their banking app to see that their funds have actually been deposited. So it's a win-win tool, and it's also a more efficient tool for you because you're not writing so many checks. You're actually, over the long haul, you save money because checks are expensive. I think there was a study done recently that says it's about $5 per employee per check that you write per payroll cycle, which, as soon as you have about 5 employees, you're going to save money by using direct deposit. And there's other benefits to it as well. So that's how we can help you support your employees. And, we have a number of different free accounts as well, a number of spiffs at Arbor that we offer to all of our members that I think our people find favorable with those tools and services. So key points that I covered: understanding those products and services available to small business. Additional key points to keep in mind: you may benefit from our products and services offered by financial institutions. It's important for you to know what options are available to you. And, like I said, we look at ourselves on our business team as relationship managers, as business consultants. We help line you up with different tools, not only that we have to offer, but that are available out there in the marketplace. We offer different services, offer different levels of support. It's important for you to shop around. I like to tell people our story at Arbor. We are part of the community, and we want you to be successful in the community. So that's very, very important to us. And those long-term relationships are significant. We want to be successful in the long term, and we are successful because you are successful. And those are win-win relationships that we like to create. And I just want to thank you for your time. And I know Ben's going to open it up to questions.
Thank you so much, everybody. Ken, thank you so much for showing up today. I do appreciate the professional insight. As always, I always learn something every time I chat with you, because you've been doing it for how many years? You've been in the industry for now?
You know, I don't want to say. I
Okay.
started in 1987, so I guess this is 34.
Quite a few years, and we always love that professional insight. So for people that joined in late, we will send a recording out of this. I'm hoping to get it out later today. It'll be an opportunity, if you have questions more that are personal, to respond back to Ken through that channel. But before I wrap up, was there any questions from our participants? All right. Well, I definitely want to thank you again. And a reminder that we will send out the recording. There will be an opportunity, if you have more questions for Ken, our business services manager, to reach out at that point. But I do want to thank you for tuning in. Check back in June, as we'll be focusing more on buying a home and considering home ownership, as well as the different types of mortgages. So we look forward to seeing you then.